Imagine waking up to news no one predicted. The US has just invaded Venezuela. A scenario that once seemed unthinkable has now become reality. Yes, as investors, our first question isn't why, but what does this actually mean for our money? In this video, we are cutting through the noise. We are breaking down the 5 critical ways a US war in Venezuela will shake the global stock market, directly impacting your portfolio and perhaps your pocket. This isn't just geopolitics. This is your financial future. On this episode, we are actually looking at the 5 major impact of the US Venezuela invasion on your money and also your portfolio. Welcome to Stocker Team, the investors channel. We will be talking about these key factors and how it affects your portfolio. Let's get right into it. Just before we go, this episode is brought to you by StockerTeam.com, the platform for retail investors to get guidance, coaching, and how to pick stocks and build long-term and sustainable portfolio. Let's start with the most immediate and profound impact, which is oil. Venezuela actually sits on the largest proven oil reserves in the world. So even though production has been very low, any military conflict in a major oil producing country like Venezuela will actually send a lot of shockwaves into the global oil market. So number one, we will actually see a rapid impact, significant spike in the price of global oil prices. So perhaps we could see 120, 150, and even 200 per barrel, perhaps maybe overnight. We haven't actually seen what is going to happen in the futures market for oil, but this is actually going to be perhaps a possibility. So it's just not about gas at the pump, it's about the cost of transporting everything. So at the end of the day, if oil prices are going up, which the US doesn't actually want, it actually means that inflation for many things that you actually purchase could actually go up. So how will the market react to a higher oil price? Because if the crude oil price keeps going up, apart from the impact on inflation, inflation actually is a major headache in the financial market. Last year, inflation was a big topic. It started going down. So this might likely tick up inflation in the short to medium term, which will actually force central banks to consider aggressive interest rate hikes. Perhaps energy stocks might even surge temporarily, the likes of BP, Shell, Chevron, ExxonMobil. But we believe the broader market could actually plunge, especially, tech stocks, high-flying stocks, high-valuation stocks. Perhaps maybe the market actually even had this invasion in mind, and we saw some of those stocks actually pulling back yesterday. Let's go to the second point. The second impact is actually what we actually call flight to safety. So basically, when global stability is threatened, investors usually panic. The panic button is pressed across the global financial market, and this leads to flight to safety. And the impact of this is money actually rushes out of risky assets like stocks and into passive safe havens. So we are talking about the U.S. Treasury bonds, gold, and the silver, perhaps even the US dollar. So we could actually see treasury yield maybe even going down because more people will actually want to maybe buy the dollar. Perhaps the dollar could actually even depreciate, and we could see gold, which has done record numbers last year. Silver has done record numbers last year, and in 2026, in the first week of 2026, silver, gold, and even Bitcoin perhaps could be a safe haven. It is yet to be seen. But from a market reaction point of view, we actually expect a sharp, immediate downturn in global equity markets. So as the market actually prepares to open on Monday on Wall Street and in major global financial centers, we are actually going to see a whole lot of risk, even in emerging markets, financial centers. Even stable companies will see their valuation hit as investors actually prioritize capital preservation over growth. We could actually see a whole lot of profit taking, a whole lot of panic button, really perhaps even affecting a lot of people who have actually, placed a bet on, the stock market doing higher numbers this January. So this isn't just about Venezuela. It's about the fear of contagion, the worry that this conflict could actually spread or inspire other destabilizing global effects. China, Russia, who are allies of Venezuela. How will they actually respond? Is this an opportunity for China to escalate things in Taiwan? Is this an opportunity for Russia to actually escalate things further with Ukraine, which is an ongoing war for the past couple of years? And there was several negotiations which is still going on, but could this actually tip everything over? The third impact is actually very, very instructive, which is global supply chain could actually see further disruption and perhaps even more scarcity. So a war, particularly one involving the US in South America, for instance, might perhaps wreak havoc on already fragile global supply chain. From an impact point of view, beyond oil, let's think about the global logistics, shipping routes, insurance costs, commodity flows could be severely disrupted. Venezuela is also rich in other resources, and the uncertainty will impact global prices for things like iron ore, bauxite, and gold. So gold is already in scarcity in the last couple of years, despite the fact that a whole lot of investors saw gold as a safe haven. A lot of miners have actually really reduced their output. So this could actually make gold to be more valuable than expected. And from a market reaction point of view, companies who are relying on international trade, like Amazon, a whole lot of e-commerce giants, manufacturing raw materials, will actually see significant profit warnings. We could actually see a whole lot of profit warning in these fourth quarter results that they are yet to be released starting from next week. Consumer discretionary sectors, will suffer from lack of product and increased cost. Tech companies could see delays in chip production if critical components are affected. This could actually really exacerbate inflation pressures and prolong uncertainty. So for investors looking to actually see how the market is going to react, that is really something to ponder on. Now, looking at the wilder conflict, which is the point number four impact of this conflict. So this is just a bilateral conflict. A U.S. invasion of Venezuela could instantly escalate global geopolitical tension. Like I said earlier, countries like Russia, China, and even regional players in Latin America, they have significant interest or alliances with Venezuela. And a U.S. move could provoke diplomatic, economic, or even military responses from these powers. This risks turning a global a global system and a global order on its head, and a whole lot of geopolitical confrontation. But as an investor, what does this actually mean? Should the likes of Russia, China, and all the allies of Venezuela actually perhaps escalate or actually turn against the US? Not from a military point of view, but from an investment point of view, we could actually see surge in defense stocks, likes of Palantir, Raytheon, Northrop Grumman, Boeing, BAE Systems. But investor confidence could actually crater. Markets actually ate uncertainty, and I repeat that. Last year, when we had the tariff war, towards the end of the first quarter, we saw the market really reacting very sharply in a negative way. But this time around, that could actually, repeat itself. And the prospect of a wider proxy war or heightened tension between major global powers would deter investment, leading to prolonged market stagnation or decline. Cybersecurity stocks will actually perhaps do better, the like of CrowdStrike, Palo Alto Network, even the likes of smaller cybersecurity stocks could actually see a whole lot of pressure on the upside. And the last major impact I will actually want to talk about, which all investors have to actually pay attention to, is the domestic economic strain and the debt of the US and even the public opinion of the US regarding this conflict. So finally, let's look at the domestic economic strain within the US itself. Wars are actually very incredibly expensive Trillions of dollars will be diverted from social programs, infrastructure, tax cut towards military spending. You could actually see how the US worked with the Nigerian government, during the Christmas, and they had a strike on ISIS elements, in Nigeria that cost hundreds of millions. So a full invasion of Venezuela will be costing far more than just a one-off operation in Nigeria, against ISIS. So this actually will increase national debt and could lead to higher taxes or reduce government service down the line. And the public opinion will become highly polarized, very, very debatable, critical, and impacting political stability. From a market and investment and investor point of view, this will actually weigh on investor sentiment, especially concerning long-term economic growth. Individual reliant on government spending, even outside of defense, will actually suffer. A prolonged, expensive war will increase the likelihood of a deep and extended recession, making a sustained stock market recovery extremely challenging. This is not just about the market; it's about the very, very, thinly extended fabric of the economy. So, if the U.S. is going full frontal war, invading and actually, taking this operation to a greater height without, de-escalating, we could actually see this really turning a whole lot of things, putting a lot of uncertainty into the market. And as investors, that's why we have Stocker Team. That's why we created this channel, to actually help you cut through the clutter, to give you the guidance, the coaching on how to actually build long and sustainable portfolio. So go to stockerteam.com and actually get yourself a membership. It's just $10 per quarter. Bringing this to a close. So what is actually the cost of this conflict? So a U.S. invasion of Venezuela, while this is now really in a full-scale invasion, is going to have direct devastating consequences for your investment, at least in the short term, from an oil shock and flight to safety, to supply chain chaos, escalating global tensions, domestic strain on the U.S. budget and public opinion. As investors, you actually just need to stay cool, calm, and collected. We are going to be bringing you further update on how this is going to shape out, how we are going to play in Stocker Team, and that's why I'm actually, inviting you to join stockerteam.com membership, premium membership, so that we can break it down to you from a portfolio point of view and how we want to play. So what do you think about the U.S. invasion of Venezuela? Do you actually think this is going to be de-escalated? Is this going to bring peace into Venezuela? Would this be settled diplomatically after a few days and the market could actually catch a reprieve? What do you think about the price of crude oil going perhaps even towards 100 if the global supply chain of oil and other commodities are impacted? Let's hear from you. Your feedback is really, really, appreciated. Thank you so much for watching this episode. Please subscribe to our channel, give us a like button, and also share this video. I'll see you in the next one. Take care and bye-bye.